$1.02 US, 74 euro cents and 65 pence sterling.
For more on finance, we're joined by Rod North from Bourse Communications. Rod, good morning.
Good morning.
So the Australian market seems to be behaving in a slightly different way to its offshore relatives.
Well, it does, because we had quite a good week in the US last week. The market rose 5.5% over 5 days until Friday, and then, of course, over the weekend when the European Union leaders met and then resolved that they couldn't resolve anything and had to defer the $10.8 billion bailout and assistance discussion until next month. That sort of sent the market into a bit of a tailspin. So when our market and the Asian markets opened yesterday, we saw sort of falls of between 1% and 2%. So it puts us back into sort of uncertain territory again, with sort of expectations of, well, we really do need to deal with this European Union debt issue. And then, of course, the US has got its meeting with the Federal Reserve for 2 days later this week to sort of come up with a plan, to stimulate the economy. And really, we're not quite sure what form that might take, but just that interesting comment about tax cuts, of course, send sort of shudders up, many parts of different sides of politics in obviously both Greece and also in the US, because the Republicans aren't too sort of keen on that angle of trying to raise funds. But yet, in reality, that's probably the bitter pill that we're all going to have to take.
And increasingly, we're seeing lots of fund managers and lots of individual investors saying they're simply preferring to stay on the sidelines, switch their money into cash while this uncertainty continues to flow through global stock markets.
I think that's very much the case, and I mean, we've seen that pretty much all around the world, but in Australia in particular, the savings rates over the last couple of years have gone up enormously. There's massive amounts of money on deposit, and I think when you've got uncertainty, people just prefer, to just sit on their hands and leave their money in safe havens until we see that trend turn around and change. And it really isn't going to be until the sort of two big issues are resolved. It's the European Union debt, and it's also the US recovery needs to be sustainable, and the massive deficit in the US has got to come down before people are going to have the sort of confidence that we need to really get things moving along.
Now, on the retail company front, Solilou's Premier Investments are going to release their full year results today. What are the companies involved in that investments group?
Well, I mean, you've got a whole range of companies now. Mark McGuinness is involved there, and we're expecting obviously those results to be a bit patchy because of the whole sort of retail sector, and there was an expectation that result would be down by about 5.8%, the profit to around the 50-odd million level,
which is not that good.
Which is not that good, but of course, people need to be spending again to really help the retailers, and maybe, if we do see a rate cut at some stage, that might make a little difference and stimulate the economy.
Except we're told that we've got to keep saving as well, because our debt levels are unacceptable. What do you want us to do, spend or save?
Well, I think there can be some stimulus perhaps that might come, because we've got the Reserve Bank minutes being released today, so I think the analysts will be poring over those to see whether there's any indication perhaps whether that rate cut that is expected by a number might come before the end of the calendar year.
Rod, thanks so much.
Thank you.